we begin with the big mover after hours, and that would be Tesla, the company just reporting results. The stock is ripping higher despite reporting a revenue miss. We've got full team coverage standing by to break down those results. Fast Money friend Gene Munster is live for us in Minneapolis. But Phil LeBeau has been digging in the numbers. He continues to, and we go straight to him in Chicago. Phil.
And Melissa, the reason this stock is shooting considerably higher is because the adjusted EPS is $1.86 profit for the third quarter. And that is far above what most people were expecting. The expectation, the consensus out on the street was for a loss of 42 cents a share. Revenue did come in just a little under expectations at $6.30 billion. The expectation was for $6.33 billion in revenue. And then when you look at their gross margins, 18.7% is what most of the analysts were zeroing in on in terms of what the expectation was for the third quarter. Remember, many people believed as they were increasing Model 3 deliveries, especially at the higher price point, that we might see higher gross margins. Well, the Gap Auto gross margins coming in at 22.3%. A couple of production notes. First of all, trial production has begun at the Shanghai plant. Remember, they're going to be ramping up production and deliveries in China as they head into the end of the year. The Model Y, according to Tesla, is ahead of schedule with production beginning in the summer of next year. And there is limited volume in the Tesla Semi coming next year as well. The conference call, Melissa, that's the one that everybody's focused on because that's when we hear from Tesla CEO Elon Musk. That'll be coming up a little bit later on after you guys are off the air, but you can bet that's going to be the focus.
Phil, gross margins, as you mentioned, 22.8, which is sequentially better. Gap gross margins were better sequentially also. And cash equivalents were better year on year as well as sequentially. What stood out to me, Phil, in this is that there's a lot of emphasis, no surprise, on the Shanghai factory. And in fact, it looks like they changed the format of their investor letter. It's very different. It's,
it's far
shocking
different,
to me.
Which is why the people in the newsroom were saying, hold on a second.
Exactly.
What are we looking at?
I mean, now you can actually compare numbers very easily, sequentially, as well as year on year. But they have a lot of color photos of the Shanghai factory. And that's, I think, where a lot of analysts have a lot of questions, right?
I think that's going to be a primary focus for all the questions on the conference call. Melissa, remember this. China is not only the world's largest auto market, it is the world's largest EV market. And I've been there, and I know others have been there as well. Tesla is a brand that stands out with Chinese buyers, and they know that. So if they can get a successful launch with this factory over there, if it's not a messy launch, if it's clean, they have a real chance to really do very well, at least initially in China and Beijing and the tier 1 cities, and then filter out from there.
All right, Phil, thanks. Phil LeBeau in Chicago with the latest on Tesla. What'd you make of the quarter, Guy?
Well, I'm looking through it now. So it was 185 in May, the stock. I incorrectly now, in retrospect, thought the move up to 255 squeezed out a lot of the shorts into this earnings period. At 26% short interest, I thought the majority of them gotten squeezed as this move higher. I thought the trade was to fade this move. That was incorrect. You pointed out all the good things in the quarter. Margins were excellent. Revenue's disappointing. I have no idea where the EPS came from. That takes some digging. It's going to be interesting to see what they say on this call. The conference call is always a wild card. I'll say again, I don't necessarily believe the story, but I didn't believe it at 255 either, so you got to sort of reevaluate things.
Yeah, so good for Tesla. I mean, this sounds like it was a great quarter for them. I'd love to see what they actually have under the hood when it comes to that EPS number. But some of the things that concern me about Tesla, which still makes it a no-touch for us, is you do have all these deeper-pocketed competitors coming out over the course of the next several months. You've got Volkswagen set to compete with the Model 3. You've got Porsche set to compete with the Model S. And look what happened to Netflix as new competitors entered that market. So I am concerned about the stock in the long run.
So, look, I'm short the stock. I'm short it around these levels, even a little bit higher. But I tell you what, the things that are the most important here are really about the cash flow and are really about the earnings side. But what's interesting is, like, the cynic in me said, hey, all I was hearing about was China, and this was an attention diversion where I think, you know, look, they can begin production in China. China's an exciting market, but we don't really have to know what's going on in China in terms of true demand. We can just assume that China's a great place and diverting attention to China's great. But look, the the profitability here is the most important thing because the balance sheet is all I really care about. And when they also tell you that we think we're going to be well above 360,000 in terms of deliveries, that means that the fourth quarter is going to be by far a record quarter. In other words, nothing they've ever even been close to doing based upon the numbers we've had so far year to date, which is also extraordinary. I'm very cynical on that. The thing about the profitability that you have to remember is they are cutting CapEx, they are cutting OpEx, they are doing everything they can, and they did a mini restructuring, I would argue, in most of 2019. So when you cut all of that, you should be more cash flow positive. And I think, can you really grow in an environment if this is a growth story? But right now, the numbers that I'm looking at, they've answered a lot of questions, and I have not changed my view.
Skeptics abound on this desk piece. What do you say?
Well, I understand why they are skeptics, and it makes a lot of sense to me because we've been promised a lot of things in the past. We've had delivery numbers that were absolutely way out in the sky that didn't ever occur. But can they actually get to some of these numbers? I mean, Guy, the one thing I would push back a little bit was you said disappointing in terms of revenue, pretty close to in line. I mean, it missed, but it's pretty close to in line. So I thought that was pretty interesting. I think also the possibility of what might exist, Tim, in terms of the China production, that sort of stood out to me when Phil was talking about that. That's begun. That's something that could go forward. And is that something that they actually can maybe take market share somehow over there where there's already plenty of EV competition? So I think there's a lot of interesting things about this right now. The cash and cash equivalents, you brought that up, Mel. That's something we always care about. That's something we always look at, and it seems like that number's not bad. So there's a lot of, I wouldn't say great things that came out of this, but I'd say a lot of not so bad and maybe pretty good. But can they continue to deliver? Are they going to deliver the 360,000 plus vehicles? But right now, you got to look at those margins.
Highly confident.
You got to be pretty impressed, too, with if you're expecting about 18% and they're delivering 22+% in terms of the margins, and maybe that's a projection towards 25%. That's going to be pretty interesting. I mean, I know these are all numbers that we all look at and we say, sort of scratch your head at how real they feel sometimes. Yeah. But the numbers that we're looking at are the numbers we have to deal with. And right now, that's why I think we're seeing this huge spike in the stock.
Yeah, up 14% right now. Let's get more reaction to Tesla's results. Bring in Loup Ventures founder, Fast Money friend, Gene Munster. Gene, why do you think the stock's up so much?
Melissa, this is a great quarter for him, and I reluctantly use the word great because I think it's such an emotional stock one way or the other, and I don't want to pick sides here. I want to stay straight and narrow down the road. And specifically what happened, and in hindsight, they kind of told us that this would happen in their June letter, that they've been recognizing some revenue from the deferred component. That is probably the biggest missing piece between that revenue fractional miss and the strong earnings, is that they have, call it, $880 million in deferred revenue. Last quarter, they said there was $567 million that would be recognized over the next year. But the piece that they said, the incremental piece that we learned from the letter that they just put out, was that they still have nearly $500 million to recognize going forward. And so what that probably means is a portion of this upside in earnings, maybe considered a third or a half of it, was related to deferred, essentially 100% margin revenue that came from this full self-driving feature that they've been selling. So the reason why that is an important factor in this is when we think about this quarter relative to the Tesla story, is that the deliveries have been moving in the right direction. I'm surprised that their guidance will call for more than 100 probably and 510,000 vehicles, record number in the December quarter. But the earnings piece, their ability to shave off this deferred income, makes it more easy for the company to essentially improve that earnings piece, which obviously has been one of the negatives around the story. And they can sustain that $570 million. They could take pieces of that over the next 2 years. And so this whole idea that we're one quarter away from things kind of collapsing, I think that story took a step back and the overall story took a step forward today.
In terms of the other items, what Phil and I were talking about were all of the Shanghai pictures. The Shanghai Gigafactory looks like it's ahead of schedule, according to this newsletter. If we can take a look at some of those pictures, Gene. How big of the bull story is that? How big of the 14% rise in the after hours is Shanghai?
I think it's a small part of it. I think the bigger part is this earnings piece, and you can just see some of the leverage, how they pull off the deferred, and the impact on EPS. I think that's the biggest piece. Shanghai is important. Put it into context, call it 15% of Tesla sales come from China, and that is at products that are essentially 20 to 40% more expensive because of tariffs. Some of those, not all of them, will be eliminated. So that opens up this big market from a logistics standpoint, from making the cars more affordable. And that my guess is that guidance, the delivery guidance for December, assumes that, I haven't had a chance to go through the whole release here, but assumes that they are going to be delivering some cars into that big market. So that's an important factor. I would put that number 2 behind the earnings and the importance of the call tonight.
Hey, Gene, it's Tim. So, yeah, let's talk about the profitability. And I think you're getting at it with the deferred revenue ability to have some flexibility in those numbers, because the confusion for me is second quarter was record numbers and record cash burn and a major loss. And you had a dynamic where we really didn't see any improvement. And in fact, the revenue mix for the 3 versus the X and the S has really been leading to less profitability. I mean, those other cars are cash cows, and the revenue mix now has them at about 20% of the overall revenue. How is margin getting better here? I'm very confused.
So in the June quarter, the margins were negatively impacted, especially on the S and X, which had a big impact on the overall margins, because essentially they had a new model. This Raven model was coming out, so they're discounting some of the old models that had a negative impact on average selling price and margins too. And so I think that probably has played, that dynamic about what happened in June has played an impact in some of that, the movement back. I also think that the reasons why margins move higher is there is some form of efficiencies that they're gaining. A year ago, there was a lot of focus on their ability to actually manufacture. Well, it's far from perfect. I think they've made some improvements there that have impacted margins. And then the last piece, we talked about the deferred income piece. A unique aspect to the Tesla story. No other car company has this model where they can upsell a $5,000 option that's pure margin and recognize it over time, and I think that impacts margins as well.
All right, Gene. Thanks, Gene Munster. Oh, actually, Gene, you know what? Before we let you go, Professor
Got a grade.
Munster, we need a grade.
Got to go to class.
I'm going to give it an A-. Just with Elon involved, he's so polarizing. I need to apologize for giving a grade that starts with a vowel with this. But this is really a good quarter. They show that they can continue to grow. The end demand question is not as significant. And on the profitability side, I also think that there was a measurable step forward here. As someone who is short the stock, I'm not short, but if I was short, I would be concerned at their ability just to keep turning the screws down in the quarters to come.
All right, Gene, thanks. Gene Munster, A- on the quarter. We see the stock after our session highs up towards 18%. Now, some of the other headlines that I don't think we verbalized, but have come out in that shareholder letter. The Model Ys ahead of schedule, production expected by summer of 2020. Positive GAAP net income going forward, positive quarterly free cash flow going forward as well. Quickly, Guy, on this move.
It's, again, I start, by the way, I finished the last time I spoke, that the huge short interest, I thought majority of those shorts covered into the quarter. I was wrong. I think that's what you're seeing now. I mean, I'm not suggesting a lot of this could be machine driven as well, and Pete can speak to that. It's a staggering move on the back of what was a good quarter. But again, I think you have to wait and hear what they have to say at 6 o'clock when we go off air. Anything can happen on this conference call. It looks great now. Things can change very quickly.